Hey future millionaires, this is Phil from the Next Chapter team and welcome to another ETF review. And today's ETF review, we're going to look at 4 ETFs from iShares. We're going to take a look at the details of each fund, the expense ratio, the performance, and then finally we'll wrap up the video with a review of what it would look like if you invested consistently in all 4 funds over a period of time. Now, please take a moment to like, subscribe, and share. Help the channel grow, reach more people, and inspire other people to save and do the right thing and invest and prepare for their futures. Now, sit back, relax, and enjoy another ETF review. Jumping into the review, we'll start with a quick recap of what an exchange-traded fund is and how to buy them. Then from there, we'll move into a detailed review of each ETF. First will be the core S&P 500 ETF, the Morningstar Mid-Cap ETF, a Morningstar Small Cap ETF, and a Currency Hedge MSCI ETF. Quick reminder, what is an ETF? 3 key points here. First off, an ETF is a group or basket of investment securities, usually stocks, bonds, or mutual or other such funds. ETFs are shares prices change all day, different from mutual funds. They change all day because they trade just like a stock. ETFs tend to have lower expense ratios and fewer brokerage commissions than mutual funds. Now, how do you buy an ETF? Well, first off, you determine what type of account you're going to buy it in, whether it be a brokerage account or an IRA, an individual retirement account. And why those two? Because usually ETFs are not available in a 401k. From there, you open this account with an investment broker. Then from there, you decide on how frequently you're going to buy your ETFs, whether it be weekly, bi-weekly, monthly, etc. We usually recommend people try to go with the same frequency in which you get paid, or at least monthly. That way, you can move on to step number 4, which is to say, set it up to be an automatic transfer in and then an automatic purchase of those ETFs. That way, you gain advantage of dollar cost averaging and you make it automatic and you take yourself out of it, the manual process. And by doing that, you have a better chance of investing more consistently. And as a quick reminder, each ETF, we're going to take a look at the ETF category, fund benchmark, fund summary, expense recap, top holdings, and then performance. That performance information is going to help us take a look at what it would look like if we invested consistently in each fund. Our first ETF is IVV. This one is a core S&P 500 ETF. This one tracks against the S&P 500 and the expense ratio is 0.3. So that means for every $10,000, you have $3 of expenses annually. Now, what do you get in this ETF? Well, top holdings include 503 companies. First up would be Microsoft, then Apple, Nvidia, Amazon, Meta Platforms, Alphabet, Berkshire Hathaway B, Alphabet Class C, and then Broadcom. Now let's take a look at that quick sector breakdown. What do you get? 29% in information technology, 13% in financials, 12.39% in healthcare, 10% in consumer discretionary, and the rest all under 10%, communications, industrials, consumer staples, energy, materials, real estate, and utilities, and then cash and other derivatives. And that's probably what's helped you go above that 500. So I know SP 500 is roughly 500 companies, and that's why you have 503. Now, some of that cash, that's going to be your separate extra line. Now let's take a quick look at the performance. So your 1 year on this one would be 29.85, 3 year 11.46, 5 year 15.02, 10 year 12.92. And if you've been in this one since the inception, I unfortunately don't have the date, it would have been 7.5. But overall, I love those 5 and 10 years numbers. Next up, we have the Morningstar Mid-Cap ETF. This is a mid-cap blend seeking to track against U.S. equities that are mid-capitalization companies. So they're not large and they're not small, they're mids. Expense ratio is 0.04, which makes it so every $10,000 is $4 of expenses annually. All right, now check this out. You have 458 different positions in this one. And what companies do you have? You have companies like CrowdStrike, Trend Technology, NXP Semiconductors, Marvel Technology, Edward Life Sciences, Workday INC, and that's a Class A, so Workday apparently has 2 different classifications of shares, and Autodesk. Now, all those top 10 only equal about 6%, which is really great. If you're looking for that strong diversity play, you're getting it with this one. You're getting nice spread out. Top 10 only, again, make about 6%. Now, let's take a look at those sectors. What sectors do you have? You have industrials, 17.96, information technology, 15.6, financials, 13.73, healthcare at 10%. Then after that, after those four, you drop down to under 10% for each one. Then you get consumer discretionaries, real estate, consumer staples, utilities, materials, energy, communications, and then again some cash. I love that, seeing that cash. You know why I like seeing just a little cash? Because it tells me that if they had to do something strategic, they've got the cash to do it. They could do that on top of liquidating another sector. So that's great. I love seeing it. But of course, because it's an index based off of an index, it has to be a really small amount of cash. And I also have to really commend whoever's directly managing, whatever person is directly managing that. They're keeping an eye on, and they're being full disclosure that we have some cash. And those cash could also be dividends that have to be reinvested as well. And just could be timing. So there's many factors that play into this. Now let's take a look at that performance. That 1 year, 22.03. 3 year, 6.73. 5 year, 10.75. 10 year, 9.62. And then since inception, 9.9. This is great. I love to see that 5 and 10 year being nice and strong, well above 8 and 9%. That tells you that, long-term investing in one like this really can pay off quite nicely. Now, moving into our Morningstar Small Cap Value ETF that goes by ISCV. This one is working against the Morningstar US Small Cap Broad Valuation Extended Index. So that's your index that it's going against. And because it's a direct index, look at those nice low expense ratio of 0.06. So for every $10,000, it is $6. That is phenomenal. Now let's see what you have in there. First off, you have over 1,000 different positions, 1,116 different companies there. And look at how that breaks down. With your top 10, you only get 5.1. And so what companies do you have in there? Toll Brothers, Dick's Sporting Goods, East West Bancorp, Ally Financial, Bath and Body Works, Tapestry, Fortune Brands, Innovative IMCB, Tenet Healthcare, and US Steel Corp. Now let's take a look at that sector. Look at this. Different from all the other ones, which usually had information technology way high, financials are the top of the sector. Financials is 26%. And then consumer discretionaries, 18.35. And then industrials, 14.38. Then from there, we drop below 10% for the rest of these. Real estate, first time now on this list so far. Real estate, healthcare, materials, energy, information technology is way low. Again, not even above 10% on that one. Utilities, communications, consumer staples, cash again. Let's look at that performance. All right, check it out. Our performance, 1 year, 19.97. 3 year, 5.19. 5 year, 8.4. 10 year, 6.51. And since inception, 18.32. Moving on to our last one. Jumping into our last fund, we've got the iShares Currency Hedge MSCI ETF. And this one is a foreign large blend. So it's composed of large and mid-cap capitalization companies that are in Europe, Australia, and Far East. And your expenses ratio here is 0.35, which means for every $10,000, it would have been $35 annually for this fund. Let's see what companies are in there. All right, so this is interesting. This one, the primary holding is showing a subsector, sub-ETF, that is iShares MSCI EAFE ETF, so it's a separate ETF. And then you've got some cash, but then you've got cash exchange for a bunch of countries. Japan, Europe, another Europe, SD. And then from there, this is what I like. They give you some additional disclosure, so they're basically giving you some insights on what the underlying holdings of this ETF. And it's companies like Novo Nordisk, ASML, Nestle, Toyota, Shell, SAP, Roche Holdings. So again, those make up about 15%. Those 10 holdings make up about 15%. So it's very interesting. You'd have to actually do another deeper dive into this other ETF. But overall, you could see some good transparency. So these underlying holdings are all subsectors, all the real details of this one, this iShares MSCI EAFE ETF. Interesting. Now let's take a look at the performance. Well, at least they show up in the performance. The details are there. Performance, 21.97 1 year, 11.89 for 3 year, 5 year, 11.54, and then 10 year of 9.10. And since inception, 9.38. And now we're going to go one step further. We're going to look at the underlying details of the ETF that is driving this current ETF. So the fund that is 99% holding. So again, this fund has one major holding. That's the iShares MSCI EAFE ETF. We're going to deep dive into that. Now let's start that ETF review off. Okay, so this fund is clearly still a very large foreign blend play. It is the fund is called EFA, that's the ticker symbol, and it is for the MSCI Europe, Australia, Asia, and Far East ETF. This fund seeks to track against large and mid-cap representation of developing markets, excluding the US and Canada. And this fund has a specific expense ratio of 0.33. So for every $10,000, it is $33 annually. Now, moving into it, how many different companies do we have in there? 745. So 745 big companies that make up about 16% include Novo Nordisk, ASML Holdings, Nestle, Shell, Toyota Motors, SAP, and then Roche Holdings. Those are some of the big ones. Now, in terms of sector breakdown, you get 19.89 in financials, 16.79 in industrials, 13.4 in healthcare, 11.4 in consumer discretionaries. Then from there, all under 10% now, we're going to do a quick rattle off. Information technology, consumer staples, materials, energy, communications, utilities, real estate, and then cash. Now let's see if they're holding true. They said they're going to have international play. First off, biggest position in terms of geography, you've got Japan, the United Kingdom, France, Switzerland, Germany, Australia, Netherlands, Denmark, Italy, and other. And you know what's not there? US and Canada. I love it when they it's really clear that they're keeping to their commitments that they've stated in their prospectus. Now let's take a look at the performance of this one. So again, this is the zoom in of EFA. So 1 year was 11.6, 3 years 2.9, 5 years 6.84, 10 year 10.31, and since inception 5.45. Now, since this is a fund of funds, I think it's important for us to take a moment to look at the performance side by side. So look at that 1 year. That 1 year you had for the fund that we're going to do the full analysis. We did the full analysis on the first one, 21.97 versus the underlying fund of 11.6. So that hedging that they're doing in the primary fund is really helping it. You can see there's almost a 10% difference in returns in the 1 year. Now the 3 year, let's take a look at that. Again, a material difference. The 3 year in the HEFA, so the hedged HEFA, that's 11.89 versus the EFA, 2.9. 5 year, again, you see a nice difference. You got 11.54 and 6.48. 10 year, you've got 9.10 versus 4.3. And then finally, since inception, you see a nice difference as well. 9.38 in the HEFA versus EFA, which is 5.45. Again, nice difference. So clearly, if you had to choose between the two, just based on performance alone, even though there's a bit of extra fees because you have fees in both, performance-wise, you're definitely seeing a nice materially higher performance in the top one. And now, let's take a look at what it would look like if you invested in all four funds consistently over a 5-year period of time. All right, now taking it to the spreadsheets, we're going to have a person who's investing consistently $7,000, so they're maxing out their IRA. And again, we're going over 4 funds. We're going to do the S&P 500 one, that's your large cap, 1 year 29.85, 5 year 15.02, 10 year 12.92. Then your second one is a mid cap. This one is a 22.03 for 1 year, 5 year 10.75, 10 year 9.62. Next we have our small cap, which had a 1 year of 19.97, 5 year 8.4, 10 year 6.51. And now our international play, this one had a 21.97 for 1 year, a 5 year of 11.54, and a 10 year of 9.1010, so 9.10%. All right, because on this channel we love and believe in long-term investing, we always take a 5-year and 10-year perspective whenever available. And so let's see what this fund, this little portfolio would look like if we invested for 5 years. 5 years, $49,000. All right, so let's break it down. So you've got a $35,000 contribution, and then $14,000 of growth. So 71% of your balance would have been principal or cash contributions, and then 29% would have been growth. Jumping to that 10-year, let's see if we break that 100K. Oh, we did it. 120, people, 120. All right, 70K, so $7,000 a year for 10 years. 70K, so 58%. The rest of your balance, or 42%, is growth. And your growth was $50,000, 50.5, $50,590 in growth. So 10 years of investing consistently in an IRA, this is what could have occurred. Hope you enjoyed the review. Many more to come. See you in the next video.
Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please take a moment to hit that like button, drop a comment, subscribe, share with your friends and family. This will help the channel reach out to more individuals just like you. We offer one-on-one coaching where we work with people and small businesses to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. So please see our link below to schedule a free 30-minute call with our team to talk through coaching and understanding your current financial situation. Also, check out some of our affiliate links below for our high yield savings account. This is a great place to put your money when you're saving up for those big purchases and your emergency fund. Check out some of our videos right here. And please enjoy and see you in the next video.